The central bank is growing increasingly concerned about what they call the potential for downside risks. And I think if you read between the lines here, what they're really talking about is potentially a recession. All right, latest from the Financial Post, the Bank of Canada interest rates could come down faster than we thought. So on July 24th, Bank of Canada cut its key interest rate again, bringing it down to 4.5%. Now, this is the second consecutive cut in just 2 months. But what's really got economists talking is the tone of the announcement and what this means for future rate changes going forward. So Governor Tiff Macklem indicated if inflation continues to ease, we could see further rate cuts sooner than previously anticipated. He notes that the country's economic growth is sluggish. Household spending is slowing down big time. And the central bank is growing increasingly concerned about what they call the potential for downside risks. And I think if you read between the lines here, what they're really talking about is potentially a recession. So what does this mean for you? Economists are now predicting that we might see rate cuts in both September and October, rather than just in October and December as previously forecasted. This shift is largely due to the Bank of Canada's dovish tone, which suggests that they're keen to continue trimming interest rates to boost economic growth. And go back to my content that I was talking about 6 months ago. I was documenting this. I've been saying that rates are too high and they're going to be coming down, because at that time I was talking to homeowners, business owners. People were struggling and it just wasn't showing up in the data yet, because this data, it lags. For those with mortgages or thinking about buying a home, this could be a big win. Lower interest rates generally mean lower monthly payments. If you have a variable rate mortgage, you will see a decrease in your payments pretty well right away. If you're in the market for a new home, this could make, well, it will make borrowing more affordable here. Economists are weighing in here, though. Avery Schenfeld from CIBC Capital Markets, they are now forecasting cuts in both September and October, again, rather than waiting until later in this year. Meanwhile, Capital Economics is predicting a more aggressive series of rate cuts here, with the policy rate, get this, potentially reaching 2.5% by mid-2025. So you guys that were talking about the mortgage renewal cliff in 25 and 26 and all these renewals coming up, that's not going to happen. There's not going to be a wave of distressed sellers if rates come back down to 2.5%. David Rosenberg, Rosenberg research suggests that the Bank of Canada is just getting started with its rate cuts. He believes that more relief is on the horizon and argues that the current rate cuts are only a partial reversal of what he calls the most severe tightening cycle we've seen since the late 1980s. And I've been documenting this. Rosenberg has been talking about this for at least, again, the last 6-7 months here, that the Bank of Canada has over-tightened. They wanted to make sure that inflation was under control. But now we have overly restrictive policy, and I think aggressive rate cuts are going to be coming to avoid driving Canada into a recession. And this is what Rosenberg has been talking about for a long time now. Now, the goal of these cuts is to stimulate economic growth and bring inflation back to target. But it's important to remember that lower rates, they do provide short-term relief, but they also come with risk. And again, that risk is going to be inflation. So the Bank of Canada has warned that progress might be uneven. They'll be making decisions one step at a time. Interest rates are not going to come down in a straight line. They're going to be stopping to reassess the situation periodically. So what should you do with this information? If you're a borrower, it may be a good time to evaluate your mortgage or other loans. If you're considering refinancing, lower rates could provide an opportunity to save money. But it's always wise to consult with a financial advisor. Again, here, I can't state this enough. I am not a CPA. I'm not a financial advisor. I'm a realtor. But talk to a qualified mortgage broker. Talk to your advisor. Understand how these changes impact your financial situation. In summary, Bank of Canada's latest rate cut is a sign that they're focused on both stimulating the economy while managing inflation. And while this could mean more affordable borrowing for Canadians, it's crucial to stay informed and plan accordingly. And again, if you want advice, reach out to me. I will put you in touch with a qualified mortgage broker here. Switching gears. I've had some commentary here on my channel. Most of it is positive, okay? I've had some great discussions on this channel. I don't want to censor it too much because I do want to keep this as an open forum. However, I have had some inflammatory remarks more recently, personal attacks. Of course, these guys, they always operate under some anonymous pseudonym. Nobody knows who these guys are. Now, look, I am bullish on the real estate market in the Lower Mainland. That is my position. I'm bullish on Vancouver, bullish on the Fraser Valley. You don't have to agree with me. You don't have to buy in Vancouver. You don't even have to live in Canada if you don't want to. But a lot of people don't like my opinion on this. And some people, they'll reach out. Most of you guys are great. When people reach out to me, generally they're homeowners, they're business owners, they're investors. I do get some first-time buyers, not as many as I used to because it's getting tougher to qualify now. But of course, with first-time buyers, I always make sure that they're going to have the right attitude. They're positive. Usually they're going to university and they have some kind of a side hustle. They know that if they want to get in, it's going to be up to them to make it happen. They're going to need to get a career and well into the six-figure income. And they know that the government or the politicians aren't going to bail them out here. But I do get another type that reach out to me occasionally. And almost immediately, I see red flags. They complain about the prices. One guy here, he said he's disgusted with Vancouver prices. Well, that's fine. You can be as disgusted as you want. You can go pound sand. The price is the price. But they will go on to blame speculators or blame realtors like myself pumping up the market. And these guys, they kind of, in a lot of cases, they will masquerade as qualified buyers when it's very clear they're not. You know, they haven't talked to their lender. They don't have their pre-qualification in hand. Some of these guys too, they like to talk a big game. You know, they have all these massive real estate holdings and massive stock portfolios. Yeah, sure you do. But these are not people that I want to associate with or do business with. And on that note, I usually know from the first phone call. Sometimes it takes a couple of phone calls, but usually I know pretty quick here when somebody's serious or if they're a joker. So, and I hate to come across as harsh here, but please don't waste my time. Because not only are you wasting my time, you're wasting your own time as well. It's not productive. I'm Jay Cooper. Feel free to comment below or subscribe. If you do want to know what your home's worth in today's market, click that green icon. Typically, I'll get you a free market analysis, typically within the first 48 hours or so. All right? Look forward to seeing you in the next video.